With interest rates on the rise, we've been seeing an impact in the real estate market, but how long will the effects last? Joining us this morning to talk more about the future of mortgage rates is Peter Shashecki from Everything Financial. Good morning. Thanks for joining us. A lot of people are concerned with interest rates changing. They're in this position right now where they may have a mortgage or they're looking to get a mortgage and they're not really sure which way to go. So what type of mortgage terms should people be looking at? What are the options there?
There's lots of options, but right now, 1 to 2 years. Kind of kick the long-term locking into the curb for now.
Why is that?
Yeah, we don't need a crystal ball for this. We just have to look at bond yields. Bond yields are what long-term mortgages, 5-year mortgages, 2-year, 3-year mortgages, any locked-in mortgage, that's what they're based on. And the bond yields right now that are for 2 years, 3 years down the road have gone down. In June, they went down 60 basis points. So we were talking to an economist last week in advance of this, and he said, I don't need a crystal ball to tell you what mortgage rates are going to be at the end of 2023. They're going to be on the decrease. And that's all based on the bond yields.
Okay, well, that's something that people would be interested to know about. So what's 2 years, you say? But for those who already have an existing mortgage, should they lock in now? And we've asked you this question here many times before. When do we do that?
You don't. You leave it right now. If you have a variable mortgage, so you're possibly, let's just be generic because they're all a little bit different, but about 1% below prime, well, you're going to be much lower. So even if we had, let's just say we have 2 more increases of the normal rate, a quarter point each, you're still well below what the rates are going to be. But in some cases, we looked at a few lenders yesterday, the 2-year rate is right now as good as the variable rate. So again, instead of just automatically doing what everyone defaults to, because that's what they're told to do, and they go to the 5-year rate, look at the 1 to 2 year rates right now, and they're different with every institution, but you could get something quite competitive just to kind of delay this until those rates start to come down in possibly the end of 2023, and that's the way it looks right now.
So that's for someone who is kind of nervous about the next couple of years and doesn't want to have to, be watching the rates and maybe to lock into something for 1 to 2 years?
Yes, and especially if your mortgage is up for renewal in the next 60 days, but don't go changing a mortgage and paying big fees with the fear tactic that, oh my gosh, 10% is on the horizon and right around the corner, which it isn't. We're still in a relatively low interest period. The problem was when COVID hit and rates went down, they went so low that any increase seems like a big increase.
It's so true. I think we're just facing a little bit of sticker shock here. Let's talk about the home equity line of credits. Do they still work with the rising rates? Because that's where people are getting dinged, I think.
They do in the right situation. You have to be disciplined still to put away money and not just pay the interest. Because remember, with a home equity line of credit, Carrie, it's interest only. And that has gone up. But what if you're in a situation, you've been hit hard with cash flow and work from COVID, and you're still getting back on your feet, and it's a matter of just making a payment. And maybe for a short-term period, cash flow is tight. Like maybe it's difficult, and that gives you some leeway on that part of the mortgage. But a lot of people have trouble understanding what a home equity line of credit is and trying to put it into simple terms. So I can put it into really simple terms.
Let us have it.
I mean, it's like renting out part of your house. And someone said to me the other day, well, maybe I'll just Airbnb a couple rooms in my house. And I thought, well, the home equity line of credit's a better solution because then you don't have to worry about a stranger coming up into your kitchen in the morning in their pajamas or worse. So look at the home equity line of credit and you're basically borrowing from yourself a couple rooms in your house. No strangers walking through your kitchen.
Okay, at least we know we have some options. Peter Shashecki, thanks for joining us this morning.
Thanks a lot, Gary.
Okay, really good information.